The information built into candlestick charts allow an investor to be able to accurately assess which direction the overall general market is moving. As we saw with this downtrending channel, and then we saw a doji gap up through that resistance level, followed by another gap up. Very simple rule of candlestick analysis. If they're gapping up, that means they're coming in with an extremely strong bullish force. It's time to be buying with the anticipation that if this is a wave, this is a wave, this wave right here will be probably the same magnitude as this wave right here. So the overall assumption is, even on days where it's consolidating, it hasn't changed the direction of the trend. You're still in a strong uptrend. As we saw today, the Dow did a little doji type day, indecision, but it didn't show any resilient selling. It actually showed that the 3T line, which is a very strong indicator, was acting as support. You add the factor that the NASDAQ, also gapping up through the resistance level in wave 3, was trading positive today. So there's a very simple analysis. If you see one index trading higher, like the NASDAQ did today, and the Dow trading slightly lower, that tells you there really hasn't been any change of investor sentiment of the current trend. Same analysis on the NASDAQ. If this is a wave, this is a wave, this wave right here should be the same magnitude as this wave right here. Knowing that there isn't any major change of investor sentiment allows investors to take advantage of the strong bullish reversal signals in the oversold area, closing above the T-line. They can stay long as it stays above the T-line. We profess that if you've got 10 positions in your portfolio and 6 of them are a steady eddy staying above the T-line, that means you really only have to concentrate on 4. We know what the technique for getting out of this trade will be. We stay long until we see a sell signal and a close back below the T-line. That also allows us to take advantage of what we can anticipate being another strong price move, like we see in Nvidia, that we could start buying calls or a spread, knowing what our upside potential is and where we could put set up a more profitable spread. The visual aspects of candlesticks allow you to see where there's been a strong reversal at another level where you saw buying occurring again in the oversold area. Just improves the probabilities that you're in the right trade at the right time. Because the candlestick charts show a visual graphic of what's going on in investor sentiment, such as Amazon today, trading in this fry pan bottom J-hook type pattern and staying strong in a mediocre market going into the close when their earnings are going to be reported, told you that the people that were in the know, probably with a lot better, closer research to what's going on in the company than you and I sitting out here in the public no man's land, told us they were still buying going into the close even though the earnings report was coming out. As we saw, their earnings have now moved the stock price up in conjunction with what the chart was telling us, trading now at the 952, 953 level. And it doesn't matter what markets you're trading. In our options and futures trading room, we just put a simple buy stop right here at the breakout level at 118 even. That if it came up through, it was 116.80 was the breakout coming up through this level. As you can see, we were buying based on a J-hook pattern, using the T-line as support, and that if it started trading positive, this was our wave 1, this was wave 2, this was wave 3. So we're in the right position at the right time, seeing that live cattle has moved up the limit for the past 2 days after we got in. That'll be it. We'll see you in the chat rooms.